The next time you tap your card to buy a coffee, consider the movement of that money. No physical cash leaves your pocket. You are simply instructing a digital system to update a few numbers. For generations, that system has been controlled by centralized governments. They issue the money, manage the printing presses, and regulate the flow of currency. Sitting at the center of this flow is the bank. They act as the record keepers. When you buy that coffee, you trust a bank's centralized digital ledger to deduct funds from your account and add them to the merchant's. This reliance creates friction. Centralized institutions charge processing fees, impose withdrawal limits, and can take days to finalize a simple international wire transfer. In 2009, an anonymous programmer known as Satoshi Nakamoto proposed a radical alternative, a system that removes the bank entirely, allowing two people to trade digital value directly. Without a central authority to keep the books, a technical problem arises. How do you prove someone has the funds, and what stops them from spending the same digital dollar twice? To solve this vacuum of trust, cryptocurrency replaces the bank with a decentralized system of mathematics. To understand how, we have to trace a single transaction from start to finish. The process begins when you decide to send cryptocurrency to a friend. You open your digital wallet and hit send. Crypto wallets function as digital keychains. They hold the cryptographic credentials required to authorize a movement of funds, though the balance itself is stored as a record shared across the network. The first credential is your public key. It works like a bank routing number, an address you share to direct funds. The second is your private key. This is the secret password used to sign off on any transfer. When you sign that transfer and hit send, your request isn't routed to a bank server. Instead, it is broadcast out to a global network. Thousands of independent computers, called nodes, receive this broadcast. These machines are located all over the world, constantly monitoring the network for new activity. Your transfer request is now public, but it remains pending. The burden of trust shifts from a single corporate bank to this decentralized swarm of machines. To move that transfer from pending to permanent, those independent computers must verify the mathematical validity of the request. Mining is where computers across the network calculate a specific numerical solution. This process, proof of work, validates the transfer. The first computer to find the solution validates the transaction, receiving a reward in new cryptocurrency for securing the network. Your verified transaction is then grouped with other recent transfers, forming a single data block. This block receives a cryptographic hash and chains to the prior block. This sequence is the blockchain. Because the math is sequential, an added block cannot be edited. The transparent ledger duplicates across computers, making the record tamper-proof. The transaction is now complete. A network of independent machines has achieved consensus and finalized a transfer of wealth without a central leader. This transfer was global, fast, and processed entirely without the intervention of a traditional bank. This framework also supports smart contracts. These are software programs that automatically execute when specific conditions are met. Blockchain can manage complex agreements, like insurance or property sales, without lawyers or brokers. However, removing the central authority also removes the safety net. Without regulation, the space is prone to volatile price swings. Because of anonymity, users also face a persistent threat from scams and hacking. There is also the matter of the private key. If you lose your secret password, your money is permanently gone. There is no customer service to call and no bank manager to reset your access. Participating in this ecosystem requires thorough research before investing or engaging with the technology. Cryptocurrency reimagines human trust, shifting power from brick-and-mortar institutions to mathematics. It is a financial frontier that is technically brilliant, revolutionary, and unforgiving.